All right, let's do it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. Got stopped out of some stuff. Talk about that. Yeah, frustrating day. Let's take a look at the indices. So when you look at, man, it felt like such a bearish day today. And I get so frustrated when I feel like I just battled like a really bearish day. And then here at the end of the day, I look where the S&P is, and we were down 0.16%. Down 0.16%. Nothing. How about the Nasdaq? Down 0.4%. A little bit more down. The Russell's really where the damage came in. Russell down 1.2% or so and losing the key 225 levels. Let's talk about it. So impressive that the S&P here is relatively strong compared to both the Nasdaq and the IWM. Like you usually don't see that. It's usually a battle back and forth on relative strength and relative weakness between the Russell and the Qs. But today the S&P outperformed both of them. You look at this, price action here in the S&P. Everything just looks fine and healthy. Potentially another higher low after a baby price correction after 6 days of time correction. Still above the 21 EMA. Still above all other key levels. Still above 445. We start losing 445 in the SPYs, then maybe the S&P goes to more neutral territory from bullish territory. I think you guys know I really like to categorize the market in terms of bullish, neutral, bearish, and I like to do that with all three indices. And then if I've got bullish S&P, bullish Russell, bullish Nasdaq, well, I've got like time frame continuity that is bullish across the board with all three major indices. I definitely want to be trading to the long side. On another occasion, I might have, a bullish Nasdaq, a neutral S&P, and a bearish Russell. In which case, you could be looking long some things, short some things. You really want to pay attention to your relative strength and relative weakness. You don't have that same degree of continuity amongst the markets. So S&P here, just looking nice and normal and bullish, just like always, down real small. Nasdaq also looking fine. A little bit of a lower tail here into the ADMA, just basically continuing the time correction that has been ongoing for the entire month of September. On September 1st, we saw that little baby shooting star candle on non-confirming volume for the Nasdaq when Apple had its shooting star that we're now above. Amazon had its shooting star candle that we're also traded above today. The Qs have not yet traded above. Apple was pretty weak today. Nothing really to talk about there. The weakness really came into the IWM. And when I'm looking at the stocks that are out there right now, sorry, I was just reading the comment there. I'm just making sure I'm hoping my sound is good today. If not, I can go in and have the tech team play with some more settings tomorrow. The IWM is really where your weakness is today. And for me, when it felt like such a bearish market, a lot of times when the IWM is this weak, we end up seeing breadth be really poor. So I'd be curious to see what the advancer decliner kind of line looked like. It seemed like breadth was really poor today. I know for myself, my portfolio of stocks that I'm in, for the most part, the longs were a disaster. It's crazy because, again, the S&P is only down 0.1%, but of my entire long portfolio of however many names it is, 15 stocks or something like that, only one of them was positive. AMC is my second best name of the day, and that's a short, and it wasn't even down that much compared to a lot of other stocks. And then my third best name of the day today was actually shorting the VXX, which, it felt like such a bearish day, so this VXX should be up a lot, and that position should hurt me. But shorting the VXX is actually, one of my better names in the day, even though I never really got too heavy on it. I mean, you look at the VXX, VXX closed basically flat on the day today. I was shorting, I never got too heavy. but I was shorting pre-market and light, basically at the open. I shorted some, I think I got filled here at 26.24 actually. Got this little bit of a pullback, reloaded, kind of worked it a little bit. You know, this is just such a garbage product. I watched, you know, they're trying, if you, as you guys, thanks for that, Chris. It did feel worse. You know, they're trying to get me to do a lot more media type stuff, which I'm pretty open-minded to giving that a try, and that's why we're, you know, broadcasting the afternoon meetings on YouTube, and they gave me my own YouTube, by the way, which you guys should all give a subscribe to. Would appreciate that. It is this Derrick the Trader is what it's called on YouTube. Check it out. Also check out our Twitter, which is @ProDesVTF. But they're trying to get me to do more of that type of stuff, and I watched some TikTok video, which I was briefly on TikTok a long time ago, and then I deleted it because I heard that the Chinese government was using it to steal all my data. And I'm sure they already have all my data anyway. I mean, I'm on WeChat and everything else. But I was watching somebody on TikTok talking about like how it's going to be a bearish market, and you know, you got to be buying VXX and some of these other like leveraged ETFs that are subject to time decay. I just want to talk about, you know, this VXX. I actually really like shorting this thing when it's easy to borrow, and it's been easy to borrow. Now you got to be careful, because if you do get a bear market, this thing can rip really hard and really fast. You can see here in the coronavirus bear market, you know, VXX went from $47 to a high of, you know, 315 over the course of a very short period of time. Obviously, the coronavirus bear market, you know, one of those like 50% type bear markets, especially the speed in which it happened, that tends to be like a 1 in every 10-year type of event. But you can even see here the smaller spikes on it. But this VXX is such a garbage product. If you want to go long VXX as a short time frame trade because the market is tanking, fine, that makes sense. But I'm watching this one video, and the guy is like recommending like, oh, the big bear market's coming, everyone should be buying and holding VXX. Man, you buy and hold VXX, it's subject to time decay. This is like one of the most garbage products that you could ever own. Look at this thing. It was $450 million. It was $450 million back in 2010. But because of the time decay, it's not, even if the market like goes down, if the market goes sideways, this thing goes down. The market goes up, it usually does, this thing goes down. If the market goes down, this thing even goes down, but you might see very, you know, sharp spikes in it. So I'm just watching that kind of video as they want me to do more of that stuff, and I'm just like, man, some of the advice out there that people are getting on trading and investing is just so garbage that maybe it's fuel to the fire for me to actually do more of this type of stuff that they want me to do. But anyway, you know, I shorted some VXX today. It turned out to be one of my best names, even though, you know, from a small time frame day trading type perspective, even though it felt like the market was kind of bearish, and the IWM obviously got rocked a little bit. And IWM lost that key 225. So IWM below 225, I view IWM as neutral. So SPYs are still bullish, Qs are still bullish, IWM is neutral. That means for these small cap, mid cap type stocks, you could potentially be long and short them. And what's interesting is that, you know, we still saw some short squeeze type plays today in certain names that we saw the option flow come in at, like this GSAT. Cheap $2 stock, but Pat was posting a lot of bullish option flow coming into this, and it gave, you know, a bit of a boost here. Root. This Root has generally been a pretty garbage stock. Big picture, it really needs to get above 750. But today, we saw option flow coming in. I think we saw some yesterday, too. Option flow coming in, volume really picked up, and that was strong. But for the most part, the only things out there that were really strong were defensive. XLU, utilities, up 1.8%. XLP, consumer staples, up 0.9%. Almost everything else. I mean, energy was weak, got hit down 1.3%. But it seemed like most other things were relatively pretty weak. And again, going back to the IWM, or even though, yeah, you know, we saw a couple of those squeezes still take place, a lot of those speculative small cap type stocks, ATER, Yeah, AT. This isn't. I keep being a day too early on these things. I was heavy in this ATER at $8 yesterday. Ended up getting out for like a break-even trade, and then today, of course, it rips to above 10. But a lot of these stocks that are in that speculative list today were really weak. Like look at this sell-off in Palantir today. You know, just a bearish engulfing bar taking out 6 days or so of price action on the way up. We're seeing that kind of a lot of names. Jumai, you know, failed and kind of came back down today. You know, that's SoFi that I've gotten myself into. Find that one pulled back, but it had a big up move. It just pulled back to the moving averages, so I'm not really too worried about that one yet. But there was definitely weakness to go around. Honestly, one of my biggest disappointments on the day was in this WOOF that I've been trading. So WOOF, $22 is a key level. I've been in this stock since, I believe, this day. I think I got in on September 1st. Pat posted a little bit of option flow on that day. It broke through $22. I managed by the skin of my teeth to not get stopped out on any of the last 3 trading sessions. And then it had news of an insider buy. I don't remember exactly how much. I don't remember if it was the CEO or the CFO. But news came out after hours of an insider buy in this WOOF that caused it to gap up really big. And that actually got me excited because we know that this stock is at large short interest. If it's gapping up above 22, that's technically a breakaway gap. So I'm looking at news, and honestly, I really don't care about insider buying and selling too much. It's like one of it's a relatively not important piece of news that could affect a stock, I think, overall. And I've read studies that show that the insiders at companies are sometimes some of the worst at actually trading their own stock. But all the same, you know, got hit with that news, and it's trading above 22, so that makes it a breakaway gap candidate on news in a stock that's got high short interest in a market where we're seeing a lot of short squeezes occur. I'm still swinging it. I was really excited about it. I was like, oh man, this could actually explode. I'm so lucky that I didn't get stopped out of any of those last 3 trading sessions because there was like 2 different days where I got like a penny away from my stop out and never actually triggered it. And this was actually one of my ideas for the day for the team, and it totally failed. I was like, you know, you get a pullback to, I think I said like the 22.30 area, 22.35. This thing, by the way, opened up, you know, the opening high here is 22.85. I think when we were talking about it, yeah, it opened up at 22.83. When we were talking about it in the morning meeting, it was in the 22.80s. So I was like, oh, if we could get a pullback to like 22.35 in this WOOF, I think it might be a great buy versus, you know, $22 off of a little bit of an opening price correction or something like that if you can get it at that price. This thing just totally failed. You know, along with the sell-off in a lot of these types of stocks today, these speculative names really all got hit. But this trade just totally failed. Tried to make a pivot low like 22.10, bounced up a little bit, didn't give any follow through. And not only did it fail on that trade versus the 22 for the breakaway gap, it even stopped me out of my swing trade that I've been in for all these days on the break of these lows. So I got stopped out below 21.50 in WOOF today, so I no longer have that position. And it actually didn't close terribly. It closed back at $22, so creating a little bit of a doji, but there's still a ton of selling that's coming into this thing above 22. So I got stopped out of that. I got stopped out of this MMAT today as well, almost at the low. So MMAT, I've spoken about this one as well. It just was another one of these potential short squeeze candidate type stocks that I was looking for, where I didn't lose money in this thing, and I didn't lose money in WOOF either. Of course, if I did, it would mean I had a really bad game plan. But I didn't really make money in them. You know, I was, you know, I had a lot of stock in that WOOF looking for that final kind of home run on the short squeeze. The breakaway gap had me pumped up. As MMAT, you know, I booked enough on the way up to cover my risk plus some in case I get stopped out. But I wanted to see if they could really squeeze this thing up to 8.50, back up to these highs. And it didn't. It stopped me out, and it just is what it is. You could definitely make the argument that my stop was shallow. I really hate having stops. I think everybody knows this. I hate having stops above the ADMA, and it was above the ADMA on the daily chart. It actually held the ADMA on the daily chart perfectly. So this MMAT, I know someone asked me about it in the afternoon meeting yesterday also. It's still technically kind of intact, but it pulled back deep enough where I got to follow my game plan. I can't turn a winner into a loser, and I got stopped out of that as well. The only other, my day trading actually wasn't bad today. I made some money in Coursera, buying off the $35 support early on in the day. I bought with some size and was able to capture this pop. So I was able to make some money from a day trading perspective in Coursera and a couple of other things. One where I lost some money on, not too much, was this NNDM, and I cheated. I did what I call a cheat, and well, sometimes if you cheat and you get caught, and you're in trouble. It's a risk reward thing, right? It's like one of the examples I like to give when I talk about cheating is if you're in college, right, or in high school or whatever, and you cheat on your exams. Well, what's the risk reward on cheating on your exams in high school or college? Well, the reward is that you get A+ grades if you don't get caught. The risk is you get caught and you get kicked out of school, right? So you got to judge that risk reward and see if it's worth it. And I'm not here to pass judgment or say anything else about that. For the record, I never cheated in college ever. I maybe read off somebody else's Scantron once or twice back in high school. So 660 was really the level in NNDM that I was looking for the break. And this one also had a little bit of news after hours yesterday. I actually don't remember what it was. It was set to open up right beneath that 660. So I actually cheated on this one, and I bought around 650, a little bit above 650. So I cheated on this for 10 cents. And the downside is I got caught. It never actually broke 660. So when I got stopped out of this thing, when it broke the opening low here, and luckily I got stopped out because this kind of turned into a bloodbath after that. When I got stopped out of this thing, I took a loss, not a huge loss, but I took a loss in a trade that didn't really require me taking a loss on because this isn't a failed trade because it never actually triggered. If this thing broke 660 and then pulled back and failed and stopped me out, that'd be a failed trade. I can't view this as a failed trade because it never actually triggered. It's just me kind of cheating and getting caught and kind of throwing some money in the garbage. And once again, here's another one of these speculative type stocks, NNDM, that took a pretty big hit today and was really weak. Triple D, also really weak. Fubo, which I'm still swinging from this breakout, when we bought at $28. Super, super weak today. Fubo down 3, almost 4%. Sumo, another speculative name that I'm involved in, pulled all the way back to this $20 today. Sumo was down about 10% today. They have earnings tomorrow, by the way. It's just a lot of weakness out there. And then, some of our big tech stocks, there was no real setups in them. Apple, we weren't looking for a setup in today. Microsoft, I know maybe we spoke about trying to be long versus either yesterday's low or a little more ideally the absolute low of the consolidation, which is from August 27th at 296.83, which stays low. It held that. Microsoft's looking okay, but it's just kind of difficult price action. So I don't really have anything else to talk about. I thought that the tape today and the trading session was actually particularly difficult. When I see that the SPYs are only down 0.1%, but I see that my portfolio of longs, I basically only have one of them that was positive on the day, and my second best name is actually my only short, but yet my third best name is being short VXX. That just points to it being a really weird tape, and it kind of was that day yesterday. So it is what it is, and this is why risk management is always the most important thing. Because I don't care how good you are of a trader or how much experience you have or anything else, the key to success in this business is risk management, because you're going to have days where you're not seeing the market right. You're going to have days where you're in all the wrong names and none of the right ones, and what's going to separate you from being successful and not being successful in the long run is your ability to manage risk in those periods of time. So that's why I end literally every morning meeting as that warning. Guys, let's make sure to manage risk today. It's the key to the business. And I genuinely believe that if you're a new trader and your risk management is good enough, you can be profitable and know almost nothing else. You just create really good risk management rules for yourself and you're really disciplined with them. So it's key to the business, and it just kind of is what it is. So that's all I got. I am happy to answer any questions that you guys have. So Going over to the VTF, scrolling up here a little bit. What's Gamestop doing after hours right now? Down, but not too bad, right? Down 3%. GameStop reports EPS of negative 76 cents, which misses the target of negative 60. Sorry, they report an EPS loss of 76 cents, which misses the expectations of a 66-cent loss. But their sales beat by a bit. So it's trading down on that small. Christian here, could you explain the rules for the trade you took this morning in WOOF? Okay, I went over it a little bit, but I can go over it in more detail. I know this time it didn't work out and the market took a dive, but I noticed this trade seems to come up pretty often and I would like to learn it. Sure, so Christian, this is a breakaway gap trade. So I'm going to encourage you to review two classes. One is the first class in my training program, which is the Intro to Technical Analysis, where I get into support, resistance, and breakouts and breakdowns. And the other class is going to be the gap class. The gap class is the class where I specifically talk about the different types of gaps that exist in the market, what they potentially mean from a supply and demand perspective, and how you can and cannot potentially trade them. So WOOF today was a potential breakaway gap. A breakaway gap is basically a breakout that occurs via a gap. So $22, it's a little bit sloppy, but $22 has been the key, what I call closing resistance level, right? So we need a close above 22 in order for WOOF to confirm a breakout, not just tailing above and coming back down, because we've seen that happen on a number of other occasions. So the stock today, off of news, and we also know it has a high short interest, is gapping up above 22 and above all these other prior kind of tail highs where it tried to get above 22 but couldn't really close above 22. So what does that mean? We know now, if this thing is really gapping up above like 22 to 22.50 like it was, that basically any person who bought this thing that sold short this stock the entire summer, and again we know it's got a large short interest, is going to be out of the money. And that could potentially trigger a short squeeze. So you've got shorts that are getting squeezed out because of how big the gap higher is, and you've got new longs who have wanted to be long this stock but haven't really been able to sink their teeth into it because it just hasn't cleared the level well enough, who potentially want to come in and chase. So whereas with a typical common gap, the supply and demand implications of a common gap usually lead to a gap fill, a breakaway gap where the breakout occurs via a gap usually leads to the opposite. It leads to shorts getting squeezed, and we know that there's a lot of shorts in the stock, and it leads to potentially new longs coming in and chasing the stock higher. So the ideal way to trade a breakaway gap is to go long versus the previous level. So if we know the previous level is 22, we want to be going long at some point after the stock opens up at a price above 22 with our out or our stop loss at $22 or $21.99 is actually usually what I would use as the stop, because sometimes a real big buyer might come in at the actual level when they retest it. Now the other thing that you got to assess is sometimes the breakaway gap can be so big that the risk reward makes it not worth it. And when I was first doing my research in the morning meeting today, WOOF was trading at about $21.30. And for me, 30 cents risk in a stock like this, if you could buy at the open at $22.30, let's say, versus $22, and we could see a big short squeeze, maybe a day like this day back here where the volume came in and the stock went from, it put in a low that day of about 23 and a high that day of about 29. So it's $6 worth of upside on a real short squeeze day. Maybe it's not even that big. Maybe even it's just, $3 worth of upside today as a potential on a short squeeze with news coming in. You're coming in, you're buying for 30 cents worth of risk. If you're able to catch a, couple $2, $3 move on this thing, it closes really well, it becomes a swing trade, and then you're looking for even further follow through over the next several days. And one of the reasons why I got in WOOF to begin with several days ago was because of the option flow and the short interest and the technicals looking better. So that's basically what a breakaway gap is. But by the time we were doing the morning meeting, it was trading in the 2280s. The problem with buying the open at 2283 is that the risk really becomes too much. It's one thing if I'm risking 20, 30 cents on this thing, and I think I've got potential of making $2 to $3 today and possibly even more than that over the course of a short-term swing trade. That's a great risk reward. It's something else if I got to come in and I got to be buying 2280 and taking on 80 cents worth of risk for now only maybe a $2 move because so much of that move is occurring via the gap. My risk reward is obviously much worse. So that's why I was talking about maybe if we get an initial price correction here back into that 2230 area as the ADMA on the small time frame is catching up, that could be an opportunity to come in and buy this stock with that stop loss of $22. That's what the thought process was that I was trying to outline in the morning meeting today as a game plan for how to trade this thing. I still think it's a good trade. I don't care that the trade failed. You know, a mistake that you can make in trading is saying that every time you take a trade and you make money that you did a good job, and every time you take a trade and you lose money, it means that you did a bad job. That is not how trading works. When you're dealing with a game of probabilities, sometimes you will do all of the right things perfectly and lose money, and sometimes you will do all of the wrong things perfectly and actually make money. So we don't really want to ever say, oh, you know, this WOOF failed, this was a bad trade. No. We assess the premise. Was the premise there? You know, we've seen relative strength primarily from the IWM. That bodes well for a stock like this. We've seen, that this is a breakaway gap. We've seen that there's news, good volume coming in. I think if you took that trade and you lost money in it today, that it's a really good job. And it just, I really do think that one of the reasons why this trade failed was actually because of just the weakness in the IWM, and that these stocks generally got smoked today. Like I said, we just went through a whole bunch of them that were just so weak. Palantir, smoked today. Jumai, smoked today. Sumo, smoked today. Whatever. We just went through a ton of them. So WOOF getting smoked today as well kind of makes sense because that's what the sector, if you want to call it, of speculative names in this market environment basically all did. And I think that happened to be the thing that was against it on the trade, and that's the reason why it failed. But that's how a breakaway gap trade works, Christian, and I'm definitely going to encourage you to rewatch those two classes in my training program. Next here from Oriel, you spoke about hotkeys yesterday. Which ones do you use the most? For the most part, I'm bidding and offering. So I'm using my hotkeys for bidding and offering more than anything else. The way that I trade, I'm probably providing liquidity with limit orders 85% of the time on my trading. So, especially for my actively traded swing names, I will regularly have 150 to 250 limit orders out in the marketplace for all the stocks that I'm involved in that are just sitting there all day, seeing what fills me based on my game plan. So that's probably what I use the most. I try to provide liquidity to the market so I can get rebated, and I really think for the most part it's the better way to trade outside of pure momentum trades. So pure momentum trades may require you to actually take liquidity on the entry point, and then of course if you're getting stopped out of a trade, a stop out is usually going to be a take liquidity order as well. So the number one thing I'm using is my limit hotkeys. And again, that also includes hotkeys to change price. It includes hotkeys to change the ECN, the exchange that I'm routing to. But I also do utilize hotkeys for my stop losses. And I also have hotkeys for market buy, market sell, and uptick and downtick keys. Rich here. How do you handle your vacations? What vacations? Do you still trade during the morning? Do you ever have FOMO while you're on vacation or have any options on? So how I handle my vacations might not be the right way to handle vacations. Let me start with that asterisk, okay? What I do might not be the right thing. I probably should take a break from trading someday. I can't tell you the last time I was flat in the market. I don't know how many years it's been. If I had to guess, I probably haven't gone home flat in 6 years. That's a guess. When I go on vacation, I prefer to go on vacation where I'm going more west because the time zone is better for vacation for me. Because like if I'm in California, for example, like Tahoe is the best, man. Ski trips in Tahoe are also, even Idaho, but it's an hour difference where I'm located in mountain time at the Idaho house, which is right by, Jackson Hole and Grand Targhee. The way those time zones work is I can still trade the open every day. So for me, when I go on vacation, I usually still trade the open. What I don't do is I don't really do the virtual trading floor responsibilities that I have. I pass it on to Pat. I'll actually watch I'll watch Pat do the morning meeting because I'm still planning on trading the open. I'm just, banging out a couple of emails or whatever that I really have to do, and that's it. But I haven't taken like a true vacation where I have no risk on in the market in years and years and years and years. And I'm not saying that that's the right thing, but that's how I do it. And then I still like to trade the open, and I'll have my game plan, I'll have my stop losses in place, I'll have my limit orders in place, and then I'll go about my actual vacation for the rest of the day. It's also probably not the best thing to do if you're trying to be on vacation, but I'll be on my phone, not constantly, but every bit or so during market hours, checking where my positions are. Sometimes I'll call into our trade support team and I'll ask them to liquidate a position for me or something like that. I've called into the trade support team, on the ski lift on the way up and stuff like that. So that's what I do. I'm not saying that that's the right thing to do. Probably the right thing to do would be to liquidate your positions and get flat or almost flat and actually not have stress on your shoulders. But that's the way that I do it. Sahil has a question regarding routing and how to earn a rebate on a trailing stop because stop orders take liquidity. You cannot get rebated on any type of order that takes liquidity. So you will not get rebated on a trailing stop or any other type of stop where you're taking liquidity away from the market. So that's an example where you pay the extra cost. A time where you can always use a limit order, though, is just profit taking on the way up if it's part of your game plan for a percentage of your position. But look, when it comes to routing, you want to route intelligently if you're on a professional account. And again, look, if you're on an E-Trade account or a TD account or Robinhood account or one of those other garbage accounts that they're selling all your orders out to HFT firms and they're front running your orders and everything else, none of this matters. But if you're actually in a professional trading account or a retail trading account through a professional system like Interactive Brokers Pro, T3 has Sterling Trader Pro, which some guys really like, Lightspeed. Those are really the only three I can even really think of, honestly. And obviously, I'm going to be biased towards people opening up their retail account with T3 Trading Group. So if you have an interest in a retail account and you're trading actively or you're trading on you're trading professionally but not as a licensed professional, then a T3 retail account is awesome because you get that direct market access routing. If you're with a free brokerage and they're selling out your orders, none of this stuff matters. But routing is really important to learn because it can lower your overall cost basis, especially if you're a really active trader like I am who does a lot of volume. It's important. But the most important thing is always to do what's right for the trade. What you should never do is your game plan says that you have a stop loss in to get out for a loss or it's a trailing stop or whatever it is. You're going to take liquidity on that and you're going to spend a little bit more money to do so. But it's the right thing for the trade. So do the right thing for the trade, even if that means potentially costing you a little bit more money. But be conscious on knowing how to route properly for when the market is telling you that you can be routing in such a way that's advantageous to you and it's still the right way to actually trade the trade. That's what you want to do. That's the answer to your question. Do you cover risk management strategies in any of your training classes? It's a great question there, Trader Mark. I do not have a class that is specifically devoted to risk management, but I think that the class system itself is like kind of constantly encompassing it. Like the psychology class And I know for sure, I actually can't remember off the top of my head, I know for sure that there's a class where I get into what we call a limit down or a limit up down, system lockout, the various methodologies that we're using for money management and risk management. I know it's covered somewhere in it. And I'm always happy to answer questions about it in an afternoon meeting as well. Yeah, the rebate's not that sweet, Sahil. You just want to do the right thing for the trade. Next here from Ernest. Would you please give thoughts on Cpng? Ooh, good candle yesterday. Cpng looks like big support came in just under 30. Yep. And the stock seems to have remounted. I haven't heard that term used for moving average before. Remounted its shorter term EMA. Thank you in advance. No problem. Yeah, so great wake up day for the stock yesterday. Really, this is a really good candle. So based on this candle, I would rather be long or short the stock as long as it's able to stay above. I'd rather be long than short the stock as long as it's able to stay above yesterday's low. Today's candle isn't great, but it's not terrible either because yesterday was such a big day. We do want to see, maybe not necessarily tomorrow, but some point relatively soon, we want to see this stock try to make another leg and really get above 33. It might need another couple of days of consolidation up here first. That's fine. But relatively soon, we want to see this stock, maybe by early next week, recapture 33 and start giving continuation. I think the name actually held up pretty well today, considering that a lot of these types of stocks got hit pretty hard. And again, as long as it stays above the Maribozu low, which is 29.59, I think that you're in the clear on this thing and it looks pretty good. How was my first trading year? Well, my first ever trading year, I started, I think I went live in September 2010 at T3. So when you say first trading year, I don't know if you mean September 2010 till the end of that calendar year, or if you mean September to September. It was fine. It was fine. Definitely nothing spectacular. My numbers were really small when I was a new trader, which is how they should be. You want to start with small numbers. Like, even if you're a wealthy person, I think that you want to start with small numbers and build. If you got, let's say you're a wealthy person, you got $2 million to your name or whatever, and you don't want to just say, oh, I want to get into trading, let me put $2 million into my account, and then start doing risky things where you could lose 3/4 of it while you're going through the learning process. I think that you always want to start this business with smaller numbers and then build over time. And that's exactly what I did. I remember I started with access to a very small tier size, I think a maximum of 200 shares. And what I did was every time I had a profitable week, I think I added on 100 shares to my max tier. Now I would do that differently, and I teach it differently. I think that actually having a tier size as small as 200 shares or 300 shares is actually a disadvantage. I think that you want to try to have a minimum tier size of 400 shares in your trading because it enables you, even as a newer trader, to do more from a game planning perspective. And I think that it's not the tier size that matters, it's how you use it, right? So the amount of, and I actually just recorded a video on sizing, tier sizing, I think yesterday. The amount of tier size that you take in a trade should depend upon space risk and dollar risk. So the amount of shares I'm taking depends on how many dollars do I want to risk on this trade, plus what's the difference between my entry point and my out. So if I was buying at $50 and my stop loss is at $49.90, I've got 10 cents worth of risk. How many dollars do I want to risk in that trade is going to determine how many shares I take. Every 100 shares I take is going to be $10 of risk if I have 10 cents worth of space risk. So if I want to risk $100 in that trade, I'm taking 1,000 shares. I think that's the right way to actually approach it. And if you're a newer trader, always try to have 400 shares in every trade that you take because you can do more from a game planning perspective than with less. And you can still trade with small dollar risk amounts but have larger tier sizes. You can limit yourself to $100, $200 worth of risk, when you're getting started, and still have the share size to be able to game plan effectively. That's going to maximize your trading. But regardless, you still want to start small. I started small. I was decently, consistently profitable in a very small way. That's how I like to describe it. Pretty much from the get-go, so I had a specific type of trade that worked well for me, and I was disciplined with my risk management. That type of trade doesn't work anymore, by the way. I don't even really teach it. But that's how it was back then. But again, it was small. Like I'll never forget the first time I lost $750 in a day. I'd probably been trading for a few months. I think my max loss was like $300 or something like that. And I remember it very specifically. I got stuck in, not stuck. I was trading FFIV, F5 networks. Still exists. A little bit more of an expensive name. Let's see what was it look like. What did it look like in 2010? What price was it back then? 2010. Here's 2010. So, whatever. It's a $50 stock or something like that. A little bit later in 2010, actually, right? I said I went live in September, so it was a more expensive stock then. I guess it was probably more like an $80 stock when I was involved in it. I traded it off the open. It was way thinner than I expected. I think I bought like 1,000 shares, or maybe even more than that. And in under 5 minutes, I lost $750, and I wanted to curl up in a ball and cry. It was so much money to me at that point. It was so much money to me. Well, all I could think about is I've always been a hard worker. Even in high school, I remember working at a tennis association place, and I did literally everything for that place. I did the maintenance on the courts. I worked the cash register. I taught kids tennis camps. If it stormed and the courts were outdoors, they would give me a call at early in the morning just to show up to sweep all the water off the courts and all that stuff. That's what I did, and I don't remember what they paid me, $8 an hour or something like that. And here I could lose $750 in 5 minutes as a trader, and I wanted to curl up in a ball and die. Today, at one point during the day today, I was down 5 figures, and I wasn't frustrated by the amount of money I was down so much as I was a little bit frustrated by the market itself. And at this point in my career, if my P&L is between, honestly, if it's between a couple $1,000s up and a couple $1,000s down, I consider myself to still be flat on the day. So that's all scale and growth that comes with time. But you're a new trader, you want to start small. And like I said, when I was new, I don't know exactly what my numbers were for my first year. But when I was new, I was kind of consistently profitable, but in a really small way. And I was very, very focused on risk management. It was the one thing that I knew. I didn't know anything about, day trading, but I understood that at the end of the day, it's a numbers game. And it really is, guys. At the end of the day, this business is a numbers game. Trading is as simple and as difficult as making more money than you lose. That's it. That's all you got to be able to do. Make more money than you lose. Anyway, that's that for you, Sebastian. Gabriel saying, with regards to WOOF, how did you feel about buying big pullbacks back to the technical equilibrium on speculative names? I feel like at least on these past weeks, anytime a speculative name pullback hard to technical equilibrium off the open, it ends up failing at the rest of the day. I haven't noticed that. I thought you mentioned before that those names are buy high to sell higher. Yeah, for the most part, they are buy high to sell higher. WOOF is a little bit different because it's a breakaway gap. So I feel like if you got a pullback here to this 2030 just in the first 5-minute bar or whatever off volatility, technically it is buying a dip off the opening high, but you're still buying above a breakout. You're still buying at a price point at 2230 that's higher than almost any price point that it's been at in months. So you're still kind of going with the buy high to sell higher. And that is generally how I view these types of stocks. I'm not a big believer in buying dips in these types of names. When they're going down, they go down hard and fast. We want to avoid them. When they go up hard and fast as well. You don't need to be long these names when they're really rallying from the absolute bottom. Sometimes we're able to capture it like we were back in May. We caught those absolute lows back in mid-May pretty much perfectly. But yeah, in regards to WOOF, it's because it's a breakaway gap. I think buying that opening pullback to the smaller time frame equilibrium area with those moving averages makes sense. From my pal Marty, bull flag set up everywhere last week. Looking for institutional money flow for this week, next week. Where is it? Good question. From Upper Manhattan. Yeah, good question. Where is the institutional money flow? There's a few places that we really look to try to get an insight on that. A lot of it comes from Pat's daily morning note each day. And the one real-time spot where we're looking for to try to see how the institutions are thinking is in that option flow. So it's not unusual at all. And when we see that really heavy option flow coming in, this is why we pay attention to it, that day or sometimes the next day or a couple of days after is when stocks are given, really big moves, because that's where you see it in real time. Like even if you're looking at a fund's 13F filing, it's always what they did last quarter. And that's one of the cool things for all the hating that I do against Kathy and ARK. One of the things I have a lot of respect for is the fact that you get an insight into what she did every single day. And that potentially opens her up to a lot of criticism. I criticize her a lot, and I also do the opposite. I also praise her when I think it's appropriate. But I just think it's cool, not that I follow her on her trades or do what she's doing, but I think it's cool to be able to actually see, like, wow, this really big money manager did this, and this yesterday. How does it look? Like, did they do a good job? Did they do a good bad? Did they do a bad job? But yeah, I mean, to answer your question, I'm not seeing money flow. Like, that was part of what frustrated me today. And I do tend to get frustrated on these days that are defensive days. And that's what today was. XLU and XLP, that's where the money rotation went to. Money came out of speculation and into defensive. Utilities, consumer staples. And, this year has really been all about understanding that institutional money rotation, understanding relative strength and relative weakness. And this is where it was today. Utility staples, not what I tend to focus on. So, wasn't too great. That's Marty's question. All right, gang. It's almost 5 o'clock. Looks like we mainly covered it. So, I am going to end the meeting. Like I said, give a subscribe on that Derrick the Trader YouTube that we're trying to start. It's kind of brand new. Check out the Twitter that we're doing. Pat's doing a great job with the Twitter. He's posting a lot of charts in there that act as kind of educational little review lessons that people can keep an eye on. So give the ProDesk VTF Twitter a follow. Give the YouTube a subscribe. And, if you're interested in getting involved in the team in a bigger way, you can reach out to info@T3Live to get involved with a ProDesk subscription, or info@T3Trading.com if you want to learn about being a professional trader. Have a great night, everybody. I'll see you tomorrow.